To the agro space, where the soy oil futures rose nearly a percentage point today, extending gains to their highest level in more than a month. Following similar leads in the overseas markets as well, though the rising palm oil imports have limited the upside here. The rapeseed also extended losses today, though, and hit a contract low. So there is quite a bit of a diversity in the prices here. The import data of the palm oil is negative for the soy oil prices, which may not sustain at higher levels in coming sessions. Let's get in then Sandeep Bajoria. He's CEO Sunwind Group and he joins us on a Mumbai phone line. Mr. Bajoria, hi, welcome to the show. While we have seen gains coming in for soy oil, the rapeseed prices have gone down. The imports for palm oil in the Indian markets also have been on the higher side. So there are lots of contradicting fundamentals moving into the markets right now.
Yeah, actually you see today the Indian soya oil have been increasing in last 4 or 5 sessions. We've been seeing on NCDEX and in the physical market as well, because of the crush margins are not there and the meal is very sluggish this year. So hence oil has to contribute more. So oil share has to increase. That's why we saw that January futures climbing up to 732 rupees and Feb futures closing at 705 today. And another factor is the imports of soybean oil into the month of Jan and Feb are quite low. They pick up from March onwards. So hence that is another reason for the soya futures to go up. As far as palm imports are concerned, yes, last month India imported about 9 lakh tons of edible oil. That was a record for the month of December always. And however, India, now the way Indian population and the per capita consumption there is in India, which is touching about 13.5 to 14 kgs per person per year, India will need something around 170 tons of oil per annum. And out of that, our own production is going to be only about 72 lakh tons. So 103 lakh tons of edible oil will have to import this oil year, starting from 1st November 2012 to 31st October 2013.
Sure.
So this import pace of about 8 to 9 lakh tons per month is bound to happen. There is no question about it. And as far as the rapeseed is concerned, because we are seeing a crop in front of us, which will be coming from Feb onwards, and it's going to be about 64-65 lakh tons, as against about 53 lakh tons, 54 lakh tons of last year. That's why rapeseed futures are subdued. And soybean have been seen on the P high. It went up to 3,500, 3,550. Now they are trading at around 3,150, 3,200.
Yes.
So that's why soybean is having some stability. And in Chicago also, soybean, we see after the USDA report, the corn and wheat went up 1.5%. Today also corn and wheat is nearly 2% up. So that's why soybeans are finding the 19 up on the Chicago, and hence the reflection in India. That's why feed is showing about 30, 40, 50 rupees higher.
On the higher side. All right, Mr. Bajoria, we'll let you go at that. So that's the view coming in. The rapeseed prices can see further pressure on the lower side. There's enough crop and the crop has come into the markets. While soybean prices, of course, are looking at some strength. So nearly 2% of gains coming in for soybean, and soy oil prices also more than 0.5% of a strength is what they saw today. Vijay, what's your sense now coming in for the edible oil space? How are you reading into the prices? Of course, there are individual fundamentals at play, but how would you look at it as a sector?
Well, Manisha, crude palm oil ought to have gone up by this time, but it hasn't. And this year, I already talked about a fortnight ago that this year the crude palm oil rally is A, delayed, and B, muted. So I would be pleasantly surprised to see crude palm oil going up to 450, if at all, before the month of February is out. And where soya oil is concerned, it's basically being limited in its rally by crude palm oil imports, which are now cheaper thanks to the lower Malaysian duty and the falling prices in the Bursa Malaysia Derivatives Exchange. So my guess is the prices are likely to remain optimistic, but should they not rally beyond February, I feel the prices could seek equilibrium at lower levels. So the rally that we were expecting, a strong rally that we were expecting rather, is unlikely to fructify at this point in time.
Sumit, what's your sense coming in for mentha oil? I mean, of course, Vijay has been talking about it for quite some time and has been very bullish as well. Are you equally bullish? Do you see further price rise?
Yes, Manisha, we have been bullish on mentha oil and we continue to hold the same view. We are expecting mentha oil prices to move up and touch levels of around 1450 in next couple of days or in next 1 week to 10 days time horizon. So anytime dips in prices till 1380 or 1390 should be used as buying opportunity. For that, one can maintain a small stop loss of around 1370 for the initial target of 1420 and above that 1450 rupees. If by chance my stop loss of 1370 is gone away, then also we would be a buyer in Mentha at lower levels, somewhere at around 1350 or 1360 levels, with a stop loss to be placed at 1330 on lower side for the targets of 1420 and 1450. So overall we maintain our bullish view on Mentha oil.
Alright, that's about Mentha and edible oil space, but let's take a look at the other agro commodities as well, where sugar futures today rose for a second straight session, tracking firm spot markets where buying by traders outweighed higher selling by mills, which are raising cash to pay farmers for cane. Sugar prices have declined this month to hit a contract low on Thursday. However, prices have recovered since then, and on your screens, nearly 1% of a run-up coming in today. In pulses, chana hit a contract low due to new season arrivals from parts of southern India and expectations of better output and higher imports. The production is expected to be higher because the area under chana has increased. Demand from local buyers is also not supportive for the prices. There you have 1.5% of a decline coming in. In spices then, the turmeric futures rose on short covering, supported by expectations of lower output this year, but higher carry-forward stocks from the last year and approaching fresh supplies capped the gains. There was gain in jeera futures also, where value buying after prices declined more than 5% from the start of the month. But higher area under cultivation is something that's restricting gains on that space as well. Pepper futures edged up on depleting stocks and limited supplies, though an estimated rise in output and weak exports have limited the upside in this space as well. Vijay, coming to you then, one word on chana, the contract lows on that. How is it looking on charts?
In the absolute near term, Manisha, it's looking like it's under pressure. A percent and a half decline in a day with good volumes does not really augur well for bulls in the absolute near term. But my guess is sooner rather than later, I'm talking of a couple of trading sessions, not tomorrow or day after, chana should be able to find a floor, because my guess is these sentiment-based unwinding of long positions on news triggers of arrivals of the fresh stock, etc., are unlikely to basically result in a fairly large decline from here. Let's not forget, chana has already declined pretty sharply from its peak some months ago. So my guess is at around 3,800 odd levels, one needs to take a fresh look. Provided price, open interest and volumes justified, I might just want to start picking up some long positions at lower levels. But come 3,800, we'll revisit the counter again.
All right, so still under pressure and prices can go down in this space.